I'm Andrew Wood, and I'd like to briefly outline our results for FY 2014. While our FY 2014 results were below last year, we've delivered earnings that were in line with the guidance we provided to the market in November. Aggregated revenue of $7.4 billion was 3% lower, and underlying net profit after tax of $263 million was 18% lower than last year. EBIT margin for FY 2014 also declined from 6.9% to 5.8% on the prior year. However, we are pleased that margins improved in the second half to 7.6%, which represents a 3-year high. Operating cash flow was also up at $550 million compared to $444 million in FY 2013. Aggregated revenue and net profit after tax were lower than FY 2013 for two primary reasons: the downturn in the Australian business and additional project costs experienced by Worley Parsons Cord in the first half. The hydrocarbon sector delivered reduced earnings in most regions except Europe, where earnings increased due to the full-year contribution from Rosenberg Worley Parsons, and in sub-Saharan Africa, due to a major project in the region. The Australian market continued to contract due to a reduction in project activity. Worley Parsons Cord improved its performance in the second half, but full-year earnings declined compared to the prior year due to that lower project activity and the poor commercial performance of that project in the first half. In the minerals and metals chemicals sector, chemicals has continued to grow, reinforcing our diversification strategy. Minerals and metals customers continue to focus on productivity improvements and to limit capital expenditure. Capital expenditure has declined nearly 30% from its 2012 peak. Investment is largely shifting to brownfields projects. The result was particularly impacted by the earnings decline in the Australian and Latin American businesses. The infrastructure sector was impacted by a number of factors, including the downturn in resource project activity in the Australian business, the cancellation of a European nuclear project in the first half, and a decline in project activity in the European and Middle East businesses. I'm pleased to say that we maintained our strong safety performance in 2014 fiscal year. Our total recordable case frequency rate for our employees reduced to 0.10 from 0.13. Zero harm remains our goal. Going forward, our key markets continue to present challenges, including increasing competition and delays by our customers in making commitments to new developments. We expect global capital expenditure levels in hydrocarbons for FY 2015 to be flat when compared with FY 2014, with capital largely being directed to completing projects that are already underway. We believe our customers will need to initiate new projects in the medium term to maintain production, which will provide growth opportunities for our business. We're also expecting the trend of decreasing minerals and metals capital expenditure to continue for the next 12 months, but expect a recovery in the medium term. Chemicals industry capital expenditure is expected to remain strong within the US, and we expect fertiliser demand will continue to provide increasing opportunities for Worley Parsons. The outlook for our resource-related infrastructure capital expenditure is linked to the outlook for both the hydrocarbons and minerals, metals and chemicals sectors. Capital investment in non-resource infrastructure has a stronger outlook, where our expertise in environmental services, water and power is being deployed to capture opportunities in this market. The business reorganisation we announced in April is essentially complete, and we have made significant progress in achieving the objectives we set ourselves. We have simplified our corporate structure, and this is now helping to reduce duplication and overhead costs and making it easier for our business to deliver greater customer satisfaction. We have also refocused our strategy to more aggressively leverage our broad and deep technical capabilities and our diverse geographic presence. The strategic improvement initiatives being rolled out through our change program will reinforce our immediate focus under this strategy at getting better at what we do and prudently managing costs. Worley Parsons now employs some 35,600 people in 157 offices across 46 countries. In summary, we've taken decisive action to improve margins and ensure the business is responding to market conditions and our customers' needs. We're focused on realising our objective of providing our shareholders with a satisfactory return on their investments. We're confident in our prospects based upon our competitive position, our diversified operations, and our strong financial capacity.